Welcome back. You're watching Market Sense. Time now to get a fundamental view of the markets, and we've got Prakash Diwan, who's Chief Portfolio Strategist at Prakash Diwan's Wealth Circle, joining us now on the show. Prakash, to begin with, looking at the the macro environment for the domestic equity markets, there was this hope just maybe 2 weeks ago that the centre has got moving on some policy action, but now you've gone back to a Parliament's in session, this whole muddle regarding Colgate and all of that. Do you believe that's going to have a very strong impact negatively on the markets?
Well, it definitely is a speed breaker of sorts. I mean, we had a lot of expectations building up the way the announcements started trickling in, and if you really analyze the only window that the government has post this session before all the other elections start in the other states, it's just about a few weeks, 5 weeks, and that's exactly when they'll have to do whatever magic they want to come up with, and that means there'll be a lot of stress in terms of getting the consensus from other states, other parties. It's getting to look more difficult, but luckily the market is not banking too much on the expectations are not so high anymore. People have factored in a little bit of dilution in those announcements, and we are willing to look at things which could just be slightly better than what they were earlier, but not many major blockbuster announcements.
But Prakash, that's not the only speed breaker, because you've got slow economic growth, high interest rates, weak monsoon, and yet the FII flow for the month of August has been 1.02 billion, and for this year close to 11.4 billion. So what are FIIs really banking on?
I think it's very clearly the relative superiority of our markets in terms of a longer term improvable potential kind of a thing that people believe in. While we may have slipped down a little bit on the growth chart, I think there's still a lot of opportunity on a bottom-up basis. And if you notice, most of the FI money has actually come into counters which have been very select. It's not across the board, except for some ETF buying in some of the indices. Otherwise, it's a lot of money that's concentrated in select counters, select sectors. And that, I think, is the approach that most FIs would want to take at this point till there's a secular trend that emerges in terms of growth. So I know it sounds perplexing why FIs are putting in money when we still have macro parameters which are not so great to look at. But I think there's a hope that they would improve very soon, maybe in the next couple of quarters, and that's what they're banking on.
Right, Prakash, we'll just come back to you, but let's listen into Aditya Puri, MD and CEO of HDFC Bank, who believes that the NPA concerns in the banking system are somewhere overdone at a stage when banks have enough profit capacity to tackle net NPAs. In a chat with ET Now's Anirudh Ghosh, Puri also said that the interest rate environment is not that high considering the inflationary scenario.
The banking industry grows as a function of GDP. So if GDP grows at 6%, we'll probably go at the credit multiplier is 2.5. And at this point of time, I see no major reason for change there. The interest rate, given the inflationary scenario, in my opinion, is not high. And I think the Reserve Bank has clearly said that unless the factors that are contributing to inflation are tackled, then it would not be possible to go through a reduction in interest rate, because then you will not kill inflation.
So also, another thing that's been talked about a lot has been the perception that India seems to be getting in terms of the investor community at large. Today also we heard about the CAG report being tabled. So just from your kind of interactions with both the investor community and your clients, what kind of a perception you're getting in terms of how they're perceiving investing in India at this point in time?
I think we always are fond of self-flagellation. We do it a bit much. Is there concern? Yes. Is there amount of concern as we express internally? I would say no. So if India is going to solve its problems, it will be a great country. Even otherwise, it's growing. So is there concern? I would say yes. Is there overarching concern? I would say no. But I think the bigger point is that we should not be in this situation. We should be a star. And what they are looking at, and even if we can show some progress there, on the fiscal deficit, on the subsidies, on the tax, on easing the bureaucracy, I think you'll have investment flooding in. So my own view, I think we are creating a crisis out of nothing.
I just also want to get a view in terms of the whole asset quality situation in the system. Obviously, given the fact that HDFC Bank is holding on to a very good asset quality at this point in time, but the rest of the system seems to be lacking in some way or the other. So if you could just give me your view in terms of how you see the situation going forward in terms of asset quality.
I'm glad you said HDFC Bank's portfolio is healthy. More importantly, actually, I did a review this morning. Our forward indicators on the portfolio actually show an improving portfolio on the consumer side, which is the delinquency 30, 60, 90 days is actually lower than, it's about the lowest that it's ever been. Secondly, I again feel very strongly that the concern on the NPAs of the Indian banking system is overdone. Are they going up? Yes. Is there enough profit capacity to provide for them? Yes.
And also, in terms of restructuring, again, the situation is quite different with your bank. But this whole concern about restructuring and the kind of the way in which restructuring seems to be done.
There should be concern on restructuring, but I think if you take the statistical facts, normally around 15% of restructured assets move into NPA. If that does happen, even if you take restructured assets at 4%, 15% moving into NPA is an NPA rise of 0.6. So from 3 it could go to 3.5, but the difference between the Indian banking system and the rest, and that's why I have serious views in terms of the alarm that is being expressed, is that we do not have asset bubbles, our capital is intact, and any NPA that we have is largely provided for. Correct?
Okay, that's Aditya Puri in conversation with Anirudh Ghosh. And Prakash, I'm just going to pick out a point that he made. NPA concerns in the banking system are overdone. Do you think that this perhaps would hold true for some of the private names versus PSUs?
Well, I think there's a distinct, behavioral change that we've seen between private banks and the PSUs. PSUs have ended up clocking some NPAs which have been slightly more than what the street's comfortable with. But I think what Mr. Puri is alluding to is the fact that the private sector is definitely growing faster than what the NPAs are growing, which means in terms of profitability, there's enough cushion to, to provision for these growing NPAs. And we should not be kind of, getting to overreact on that. I think that's the essence of what he's trying to say.
All right, let's just shift away from the banking space for a while. We've got Sandeep Jhunjhunwala, who's Vice Chairman and Managing Director at REI Agro, joining us on the phone from Delhi. Mr. Jhunjhunwala, firstly, to begin with, if you could just walk us through what the impact of a weak monsoon has been on rice cultivation this year for you.
Yeah, as we have seen, monsoons have been weak all over the country, especially in the northern region, which is the main basmati rice growing belt. And I would believe that because of this, area under cultivation is down from the previous years, and I would also believe the output will come down, will be lower than what it was in the previous years.
So, Mr. Jhunjhunwala, if you could just quantify that for us, how much lower will your output be?
You see, we have been witnessing some rains now, and some transplantations are happening. So there will be late crop also coming in. It will be difficult for us to really quantify today what would be the real impact. But yeah, anywhere between 15 to 17% lower output is expected out of the new season.
Sure, and given that this trend isn't unique to India, would you say that your ability to price a little better on exports actually is there?
Yeah, especially for basmati, definitely we are in a very strong position. There is an underlying demand which we have always maintained, and last year has seen an unprecedented rise in rice exports, basmati rice exports, I mean, and there will be an impact in the global pricing. We will definitely be able to pass on the prices to the customers.
To what extent?
I would tend to believe it will be full.
And apart from that, now, yeah, go ahead.
Yeah, whatever is the increase over here, I'm sure that buyers across the world are aware of the fact that in not only India but other parts of the world are also affected, and this is clearly evident from the increasing price of rice all across the world. So basmati cannot remain far behind, and we will be able to price in the incremental prices with our buyers.
Right, and given the slow production of rice, do you expect the Indian government will regulate rice exports?
As far as basmati is concerned, I think basmati, most of it is exported and is not very important for the government to interfere or to put any regulations as far as the basmati is concerned. As far as non-basmati is concerned, India is sitting on fairly large stocks. And I would tend to believe it the other way around, that this is a good opportunity for the government and the Indian rice millers to liquidate some stock at better prices than what it was earlier.
Mr. Jhunjhunwala, thanks very much for taking the time out and joining in with that perspective. The stock price of REI Agro holding up, but the management clearly indicating that a 15 to 70% is how much lower their overall output can be. But Prakash, to take it back to you and dwelling on this point of monsoon, how do you see it, the weak monsoon, impacting the overall economy and particularly the Indian markets?
Well, frankly speaking, I've always found the monsoon and its estimation to be a very complex exercise, and particularly when you're midway in the season. We are such a vast country that, some part or the other is definitely going to have monsoon which is either higher or lower than averages. But the essence is that if you go to the ground in terms of meeting up with people in the rural markets, the despondency is not as much as what it is in our discussions. In fact, I was traveling over the weekend to some of these smaller locations, and the realization is that they believe they'll get over it because there's enough of a buffer in terms of most of the staple stocks, especially from last year's bumper harvest. And the consumption pattern doesn't seem to be kind of changing in any unfavorable way. So I think if the monsoon is just about 12-15% lower than averages, we could probably be lucky enough to get away with a disastrous kind of a scene in the economy.
And if you map the market movement for the benchmark indices since the 26th of July, there has been a good up move, but broader markets have been underperforming. Are there any picks that you have from that arena?
Oh yes, I mean, in fact, as I said earlier, it's a bottom-up market clearly, and if you look at some of the pharma names, we earlier had Shasun Pharma as one of our topics, but we started advising profit booking on that. Currently, we believe Suven Life Sciences, which is another small company in the pharma space that looks quite promising. You've got Torrent Pharma also, though it might seem slightly higher in terms of valuation, but it still has some headroom. So pharma seems to be the space to be with, and on a bottom-up basis, there are quite a few bargains available. The other segment which I would want to look at is auto ancillary. Some of them have actually started doing well, given the fact that it's more of an export orientation and not so much of a domestic thing that we are looking at. So Suprajit Engineering, again a very small company but very promising in its product line. So that's how we've been going about picking up some of these stocks.
Right, Prakash Dewan, many thanks for joining us on the show with that fundamental view on the equity markets.